stellar run-up seen in the stock price of Escorts Limited in today's trading session. In fact, the stock settled more than 6% higher owing to a very strong performance for the quarter gone by. Revenue, while it came in largely in line with the ET Now poll at 2017.5 crores, up almost 24% YOY. It was the profits and the margins performance that came in as a very pleasant surprise to the markets and to us at ET Now, because we didn't expect it to turn out as strong and as robust as it actually delivered. But looking at the numbers, profits came in at 280.7 crores, up 83%. We're looking at a EBITDA of 363.1 crores versus 212.3 crores, again up 71% year on year. So that's the kind of high double-digit expansion we're talking about here. Margins, 500-point improvement coming in for Escorts for Q3, 18% versus 13% in the same quarter last year. That's how they have expanded and they have grown in the previous quarter. Agri machinery revenue went up by close to 30% year on year. It came in at 1653 crore rupees. Construction equipment sales volume was up 20.1% at 1254 machines. So good growth seen as far as the construction segment is also concerned, because last year it was around 1044. This time around it grew to 1254 units for the construction segment. Equipment revenue was up 13%, coming in at 245 crores for the quarter gone by. As far as railway products division is concerned, revenue for Q3 came in at 117.5 crores against 124.5 crores in the corresponding quarter. So it has seen a bit of a dip there, largely flattish I would say. But during Q3, they executed about 69% of the total orders from new products category, with more import content and low margin compared to previous fiscal when it was only 44.2%. EBIT margin for railway division stood at 12.7% in the quarter gone by. So overall, looks like it's been a good performance, especially and primarily driven by the tractor segment, which clearly is witnessing very buoyant demand. We saw even in the monthly auto sales numbers as well how things have been panning out for the entire farm segment. Even in January, they continue to be very resilient. Escorts, in fact, saw a very stellar improvement, a very stellar growth in volumes, coming in the excess of 9,000 units for the month gone by. But let's stick to the commentary that the management gave along with the Q3 report card. They said the demand for tractors and farm mechanization is witnessing continuous growth. They're hopeful of a sustained momentum and they see strong strengthening in farm and rural economies going forward. Positive development in construction equipment space is also quite encouraging according to the management. They're optimistic of better environment ahead of business recovery in construction as well as railway equipment segments. The government efforts on COVID vaccine is likely to further infuse confidence across sector and provide further impetus to the economy. So largely it looks like they are seeing strong signals for sustained growth even now beyond Q3 as well. But if we look at specifically the quarter ending December, it definitely has been a stellar set of numbers delivered by Escorts.